Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 5 strong buy dividend stocks for December. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope everybody had a lovely Thanksgiving weekend. December has arrived, and that means it's time to take a look at 5 strong buy dividend stocks for the month ahead. All of these stocks today have an ex-dividend date in the month of December, which means you don't have to wait a long time to start collecting that passive income. I found today's stocks on TipRank's dividend calendar. Found underneath the Tools menu, here you can go week by week and day by day to see what stocks have an upcoming ex-dividend date. You can filter by a few different things such as analyst consensus, market cap, sector, and exchange name. So today, we're going to take a look at these 5 companies, what it is that they do, what kind of dividend they pay, and what Wall Street is predicting for the stock's future. Just a reminder, we're in the final day of our Cyber Monday sale where you can get 60% off TipRank's premium tools. So head on over to the website to take advantage now. Let's dive right into our 5 December dividend stocks. First up, with the nearest ex-dividend date, we're taking a look at Schlumberger. They trade under the ticker SLB and are currently priced at $36 per share. The stock has declined 16% overall in the past year, but is in the green more recently, gaining 4.5% in the last 3 months. SLB has been paying a consecutive dividend for 35 years. And while they did have to cut their dividend during the 2020 pandemic, they have been growing it back steadily ever since. In fact, over the last 3 years, their compound annual growth rate is over 23%. Their ex-dividend date is on December 3rd for payment on January 8th, with a current quarterly dividend of 28.5 cents for a yield of 3.09% and a healthy payout ratio. They shared their latest quarterly earnings report on October 16th, where we saw both an earnings and revenue beat. Earnings per share of 69 cents came in 3 cents ahead of expectations, while revenue grew 4% sequentially to $8.9 billion. The company also saw their digital revenue increase 11% and North American revenue grow by 17%. The Schlumberger stock has 15 current analyst ratings, coming in as a strong buy with 14 buys and 1 hold. The average price target comes in just shy of $46 per share for an upside potential of 26%. Looking at those recent ratings down below, they range from an upside of 4.8% with our hold all the way up to 54%. Second on our list is Sempra Energy. They trade under the ticker SRE, currently priced at about $91 per share. They are slightly in the red over the past year at 0.5%, but also have been gaining back lately, climbing 11% in the last 3 months. Sempra Energy has made 25 years of consecutive dividend payments and 17 years of consecutive growth. Their current quarterly dividend is 64.5 cents per share for a yield of 2.73%, and their next ex-dividend date is December 11th for payment on January 15th. Sempra also saw an earnings and revenue beat for their latest quarter, which they shared near the start of November. Earnings per share of $1.11 beat expectations by 20 cents per share, and the company reaffirmed their 2025 and 2026 guidance. Revenue came in at $3.15 billion, beating by $204 million, and they successfully deployed nearly $9 billion of capital in the first 3 quarters of the year. And their stock has 13 current analyst ratings, coming in as a strong buy with 10 buys and 3 holds. With an average price target just over $100 per share for an upside potential of 10.8%. Looking at those latest analyst ratings, they range from a slight downside of 2% to a high-end price target with an upside of 26%. For our third stock, we have the highest dividend yield of the bunch with Sixth Street Specialty Lending. They trade under the ticker TSLX, currently priced just shy of $22 per share. They've gained 1.5% overall in the past year, but are in the red recently, falling 11% in the last 3 months. Now, one thing to note about this stock is that it is a BDC, or business development company, and as such, they are required to pay at least 90% of their annual income out as a dividend. This leads to those higher yields, but is taxed a bit differently as well, so make sure you look into that. They do pay a steady base dividend plus a supplemental one. And their next base dividend is 46 cents per share for a dividend yield of 9.27%. That ex-dividend date is December 15th for payment on December 31st. Sixth Street shared their third quarter earnings and revenue beat at the start of November, along with some updates on a leadership transition. Earnings per share of 53 cents beat by 1 cent per share, while revenue of $109.4 million beat expectations by $771,000. The company also announced that Bo Stanley will be the new co-CEO. Sixth Street has 8 current analyst ratings and comes in as a strong buy with 6 buys and 2 holds. And their average price target of $23.50 implies an upside potential of about 8%. Looking at those price targets down below, they range from an upside of 1% up to 14.7%. Moving right along to our fourth stock, we're taking a look at Fidelity National Financial. They trade under the ticker FNF, currently priced at $58 per share. This is another one that's seen some ups and downs this past year. Over the past year, they're down 5%, year to date up 7%, and in the last 3 months down 0.25%. FNF has paid a consistent dividend for 19 years, consistently increased it for 15 years, and over the last 10 years has a compound annual growth rate of nearly 14%. Their current quarterly dividend is 50 cents per share for a yield of 3.51% and a healthy ratio at 40%. Their ex-dividend date is December 17th for payment on December 31st. FNF had an earnings and revenue beat at the start of November, along with record-breaking commercial revenue. Earnings per share of $1.63 beat by 21 cents per share, and the company saw strong financial performance with total revenue of $3.9 billion. And their title business delivered its best third quarter in history with a 34% increase in commercial revenue, and refinance orders were up 15%. FNF does just have 4 current analyst ratings, but still comes in as a strong buy with 3 buys and 1 hold. And an average price target of $68 per share for an upside potential of 15.8%. On the low end, we have our hold rating with an upside of 9% and a high-end couple of upsides here at 19%. If you've made it all the way to our fifth stock today, then do me a favor and make sure you've hit that thumbs up button. Fifth on the list is HASI. Also known as HA Sustainable Infrastructure Capital, they trade under the ticker HASI, currently priced at $33 per share. Their stock has gained 11% this past year and is up 22% in the last 3 months. They've paid a consecutive dividend for about a dozen years and have been consistently increasing it that entire time. Their current quarterly dividend is 42 cents per share for a yield of 5.87%. Their ex-dividend date is right at the end of the month on December 29th for payment on January 9th. Once again, we have another company that delivered a beat for their third quarter earnings report, which included record-breaking adjusted earnings per share, which came in at 80 cents, beating expectations by 11 cents, while revenue of $31.58 million beat by $2.98 million. They closed more than $650 million of new transactions in the quarter, and their managed assets grew 15% year over year. And their stock has 11 current analyst ratings with 9 buys and 2 holds, giving them an overall strong buy. The average price target is $41 per share for an upside potential of about 23%. Looking at those price targets, on the low end we do have a hold rating with a downside of 4.8% and a high-end price target with an upside of 48%. So that is a very quick look at 5 strong buy stocks, all with ex-dividend dates in the month of December. You can head on over to tipranks.com to do a further deep dive on these companies and let me know which one of them catches your eye the most. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thanks so much for watching. Have a wonderful day. I'll see you back here next time.